What is crypto lending? Getting loans with cryptocurrency can often be less complicated than getting traditional bank loans, but what exactly are crypto loans? Crypto enthusiasts are often encouraged to hodl their assets, keeping them safe in a wallet until the price of their chosen currency appreciates. But just like you'd feel uneasy about leaving your cash sitting around in a bank with a low interest rate, a common question is this: how can you get your digital currency to grow? This is where crypto lending comes in. Not only can it enable servers to receive interest on their stash of Bitcoin, but it enables borrowers to unlock the value of their digital assets by using it as collateral for a loan. When investing, one of the biggest challenges can be cash flow, and there's nothing worse than having to raid the capital you've got tied up in assets for short-term costs and lack liquidity. Bitcoin loan. Let's imagine that Steve has 2 Bitcoins. He doesn't want to sell any of this because he's confident that prices are going to appreciate substantially. Steve's also worried that if he does end up offloading his crypto, there's a risk that he'll end up with less Bitcoin when he buys it back at a later date. Crypto lending platforms can come to the rescue here. Typically, Steve will be given the opportunity to use his Bitcoin as collateral and receive a loan in stablecoins. Owing to the volatility of digital assets, he'll normally have to over-collateralize, meaning he'll have to lock up more Bitcoin than the overall value of the funds he's receiving. Once he's repaid the loan, plus interest, his crypto will be returned in full and he'll make a handsome profit if Bitcoin ended up appreciating as he predicted. His crypto would only be at risk if he failed to keep up with the loan's terms or if the value of the Bitcoin held as collateral fell below the value of the loan he received. Benefits of taking on a crypto loan. One of the major bonuses many see in crypto loans is that, unlike traditional banking, you won't be subject to your credit score being assessed. This means that lending is much more accessible to people who don't have a financial history, underbanked consumers who don't have a bank account, and self-employed workers who struggle to access credit because their fluctuating earnings don't meet a bank's strict lending criteria. Repayments can also be much more flexible. And whereas it can take several days for loans to clear in the old-fashioned financial world, Bitcoin loans can be practically instant. You'll also be able to make your assets liquid without triggering a taxable event, and you can adjust the loan to suit your needs. Users can also switch between crypto assets, so you can deposit Ether and borrow Tether, all on the same platform. If you like the sound of a Bitcoin loan but you're not sure where to begin, you have 2 main options: centralized and decentralized lending platforms. Centralized ecosystems have to follow certain rules and procedures to be compliant. You'll have to create an account by signing up for your chosen platform and go through the KYC, know your customer, procedures that are in place to prevent fraud and money laundering. These platforms typically have protocols in place to ensure that your collateral is safe. Some protect crypto assets via insurance or keep the majority of the digital assets in their custody in cold storage, meaning they're away from an internet connection. Centralized crypto lending platforms still record all deposits and withdrawals using blockchain technology, visible to anyone, and offer a great way to earn interest on Bitcoin alongside many other cryptocurrencies and stablecoins like USDC and DAI. To put it into perspective, your best USD savings account bank rates barely scrape past the 1% APY mark, yet many platforms offer up to 8% on crypto interest rates. It's worth doing your homework to get the best deal and avoid paying above average fees. There's more paperwork involved in getting a loan through a CeFi platform, but the fact that there's a regulated environment and a customer service representative who's just a click or phone call away could make these platforms more appealing to traditional investors. What is decentralized finance, DeFi lending? DeFi lending platforms are completely decentralized, and transactions are handled by code rather than people. Smart contracts use algorithms and protocols to automate loan payouts. Anyone can access the protocols on a decentralized finance platform, which makes them completely transparent, as nothing can be hidden on the blockchain. Unlike CeFi platforms, there's no middleman or financial regulator, which means you don't have to go through a verification process like KYC. However, DeFi interest rates for crypto lending often pale in comparison to what centralized rivals can provide. Getting a Bitcoin or ETH loan, or any other type of crypto loans on a DeFi platform, is very quick, as you won't need to pass any kind of due diligence. Thanks to smart contracts, all a user will need to do is apply for the loan and then send the crypto they want to use as the collateral to a specified wallet associated with the lending platform. The users of decentralized lending platforms can apply for a loan of any size without having to confirm their identity to a third party. Loans can be supported in stablecoins, such as USDC, fiat currencies, or cryptocurrencies, such as Ethereum or Bitcoin. So, should you get a crypto loan? On many centralized and decentralized lending platforms, you'll have the option to open up a savings account using your crypto as well as trade tokens or take out loans. With both types of lending platforms still in their early stages, it's clear that this is an exciting space to watch. There's a lot of room for growth, and the potential to access borrowing without the usual formalities could be a game changer for both the people and the financial services industry. And this has been another CMC Explainer video. If you want more of these, be sure to subscribe to our YouTube channel and